Hello everybody and welcome to another day in the market. Podcasts are going to be shorter, today and for the rest of the week, focusing only on specific data and questions, as our programs are being upgraded already. We are slowly moving towards an almost 100% machine-produced podcast. Today our programs are taking a look at IBM, Halliburton, Prologis, Lockheed Martin, Johnson & Johnson and Netflix. Remember, the machines are not trying to do an exhaustive presentation of the earnings, but just find enough info for listeners to decide if they should actually take a deeper look at a particular analyst call.
IBM announced results on April 19, 2022. Interesting facts picked up from the call. We continue to scale the 12 acquisitions we made in the last 18 months, including 2 which closed in the first quarter, and we're investing in talent across our workforce, upskilling existing resources, adding certifications and bringing in technical skills. We delivered $14.2 billion in revenue, $1.5 billion of operating pre-tax income, operating earnings per share of $1.40, and $1.2 billion of free cash flow. 90 days ago I talked about the first quarter and the full year in the context of our medium-term model, which is to deliver mid-single-digit revenue growth and about $35 billion of free cash flow from 2022 to 2024. Hybrid cloud revenue grew 32% on trailing 12-month basis to $8.3 billion, which makes up 45% of the consulting business. In technology consulting, where we architect and implement clients' cloud platform and strategies, revenue was up 19%. Growth was pervasive, led by our engagements around developing and modernizing applications for cloud deployments. We have more than 4,000 hybrid cloud platform clients, including 200 added in the first quarter. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Can you maybe characterize how IBM, which is a pretty defensive portfolio, could fare in a recessionary environment given that there have been structural portfolio changes? And then lastly, just what was the gross contribution from acquisitions and software in the quarter? But maybe if you could just take us a little deeper and help us understand, really the puts and takes for each of the software businesses, what surprised you in the quarter? Is there anything we should be conscious of for the profitability as the new Z mainframe rolls out? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 50% positive. About investments, the sentiment was 90% positive. About costs, the sentiment was 80% negative. About growth, the sentiment was 66.6% positive.
A short look at how algorithms on Mark's Sign Algo simulate investing in IBM identifies algorithm buy Sign 002 as the best algorithm for buy and hold, with a 54.58% return over the last 5 years while being 48% of the time in cash.
Halliburton announced results on April 19, 2022. Interesting facts picked up from the call. These improvements were partially offset by lower activity across multiple product service lines in Europe and lower completion tool sales throughout Asia. In our drilling and evaluation division, revenue was $1.9 billion, an increase of 22%, while operating income was $294 million, or a 72% increase. Earlier in the quarter, our completion and production division revenue grew 26% compared to the first quarter of 2021 on activity increases in North America, Africa and the Middle East, while operating income increased 17% despite transitory U.S. land sand delivery disruptions. My view is that we've moved up from where we were a quarter ago, and Jeff, we're clearly building the recount here and we're seeing an intention to come into 23 a little bit hotter from a production standpoint. In the Middle East Asia region, revenue increased 17%, primarily resulting from improved well construction services in Saudi Arabia and Oman, increased wireline activity and completion tool sales in the Middle East, and increased testing services across the region. Turning to Latin America, revenue increased 22% due to improved activity across multiple product service lines in Brazil, Argentina, and Mexico, increased well construction services in Colombia, higher completion tool sales in Guyana, improved project management activity in Ecuador and Colombia, increased testing services and wireline activity across the region, and increased artificial lift activity in Ecuador. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Do you see new capacity being added into the market by your competitors? And ultimately, will that be a constraint on the U.S. production profile over the next couple of years? What do you think the customer response will be from U.S. and international producers of natural gas with regard to activity response to what might be a structurally higher strip, Just like crude that maybe hasn't shown up yet in the fundamentals of your business through April? I know it's a bit early to say precisely, but just returning to the topic of international pricing, do you see meaningful constraints in either your available equipment in select markets or your availability of labor, or is that more of a US issue at this point? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 55% positive. About spending, the sentiment was 66.6% positive. About outlook, the sentiment was 70% positive. About growth, the sentiment was 95% positive.
Prologis announced results on April 19, 2022. Interesting facts picked up from the call. We estimate that our procurement efforts have allowed us to deliver projects 4 to 8 weeks ahead of our competition and at 7 to 8% lower costs in our essentials business. We're working to provide end-to-end solutions for our customers beyond the real estate, which is providing new sources of revenue. Given the increase in asset values in Europe and our health venture, we are increasing our net promote guidance to $460 million, most of which is occurring in the third quarter, and we are also increasing strategic capital revenues excluding promotes to a range of $550 to $565 million. Given our market rent forecast and expected rent change, the leased market could exceed 50% by year-end. The uplift in Europe was a record 6.3%, with strong appreciation across all markets, while the US increased 10.3% during the quarter following the significant 42% increase in 2021. Our margins, we always perform around 15% and we've been for the last, as far as I remember, come in at 20% to 40%. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So my question is there a limit to how high industrial rent can grow, and if so, what are they? Clearly e-commerce is intact, but has the supply chain bottlenecks impacted the increased inventory build mandate that you were seeing from customers? And could you also bifurcate the current rank growth forecast between coastal and non-coastal markets? What exactly changed over the past 3 months to cause your US market rank growth forecast to increase to 22%, up from 11% last quarter? How do you sort of think about recession, which obviously you can't control, but what are you seeing and is it different from what the macro talking heads are interpreting about some of that data? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About prices, the sentiment is about 66% negative. About costs, the sentiment is about 78% negative. About growth, the sentiment is about 57% positive. About outlook, the sentiment is about 100% negative.
Lockheed Martin announced results on April 19, 2022. Interesting facts picked up from the call. Aeronautics was flat this quarter as expected, with increased F-16 production offsetting lower volume on F-35. All 4 of these recent announcements underscore that the F-35 fighter jet remains the most capable, survivable, and highly connected platform in production, as well as the best value available today for our warfighters. It's important to note that our consolidated and Aero outlooks are dependent upon reaching agreement on F-35 lots 15 to 17 here in the second quarter, as funding constraints would likely cause a timing impact to our financial results beginning this quarter. The final bill resulted in increases that will benefit multiple Lockheed Martin programs over the next few years, including fully funding 85 F-35, 21 additional C-130J transport aircraft, 10 additional Blackhawks, 2 additional CH-53 Kelvins helicopters, as well as increases to some of our franchise satellite and missile programs this quarter. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So in terms of specifics, what products are most relevant and at a higher level? How do we think about this influencing organic top-line growth over time, say, the next 5 years, rest of the decade? And then when we think about the fiscal 23 request of 61, how does that relate to production? And how do we think about international orders being feathered in when we think about 156 units produced overall? I understand that it's too early to provide long-term outlook with regard to Ukraine, but can you give more color in terms of the nearest term opportunities for you? And as our allies step up spending for defense, how meaningful is this opportunity for you? And in addition to the F-35, should there be opportunities that we should watch for in missile and missile defense? And is there anything that got worse from a program standpoint, as you think about that, beyond fiscal or beyond 2022 outlook? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 66.6% negative. About investments, the sentiment was 50% positive. About growth, the sentiment was 66.6% positive. About outlook, the sentiment was 66.6% positive.
Johnson & Johnson announced results on April 19, 2022. Interesting facts picked up from the call. In the first quarter, we increased R&D investment by approximately 9% compared to the first quarter of 2021. The $3.5 billion investment was an 8.9% increase versus the prior year, primarily due to portfolio progression in pharmaceutical and medtech in process. When Omicron was hitting in the US in January, we had about flat diagnostic procedures and we were looking at surgical procedures down near double digit, down 10%. As a result, we anticipate that the back half performance will improve over the first half for medtech. While the first quarter demonstrated faster recovery than we anticipated, our full-year expectations remain fairly intact. Building on more than 20 major new product launches in 2021, MedTech announced the addition of 2 new innovations to our Attune knee portfolio: the iTunes cementless fixed-bearing knee with a Fixium 3DP technology and the attuned medial stabilized knee system. Moving on to our pharmaceutical segment, worldwide pharmaceutical sales of $12.9 billion increased 9.3% with growth of 2.9% in the US and 16.7% outside of the US-based. Pharmaceutical growth was driven by our broad portfolio of products paired with strong commercial execution, enabling us to deliver above-market adjusted operational sales growth, including 6 assets with double-digit growth in the quarter. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Can you specifically comment on China in terms of the impact you're currently seeing to the business and your outlook for that market, specifically given some of the lockdowns that we're seeing there? What are the levers to pull and how do you think about raising prices in this environment for each of your key divisions? Are you expecting that this erosion continues, or do you see dynamics in place that we could start to see some of those prescription trends start to stabilize a bit? So maybe for you or Ashley, can you add more color to your thinking there and the types of opportunities to consider? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, sentiment was 64% positive. About costs, sentiment was 75% negative. About growth, sentiment was 82% positive. About outlook, sentiment was 80% positive.
A short look at how algorithms on Mark's Sign Algo simulate investing in. Johnson & Johnson identifies algorithm by Sign 001 as the best algorithm for buy and hold, with a 87.98% return over the last 5 years while being 49% of the time in cash.
Netflix announced results on April 19, 2022. Interesting facts picked up from the call. We're trying to figure out over the next year or two, but think of us as quite open to offering even lower prices with advertising as a consumer choice expense. So the upcoming slate in 22, we're confident is better and more impactful than it was in 21, and we think 23 will be better and more impactful than 22. And you've talked about that for a little while now, but hoping you could kind of isolate some of those factors and then talk to us about how that informs your 2Q guide for a loss of 2 million subscribers. We've always said we ran through the coveted delays that had us backstacked. 20, 21, 20, 22 is not quite as backstacked, but it does build throughout the year, and it builds up to some of our big event films in Q4 that we're really excited about, like Knives Out to Grey Man coming up before that from the Russo brothers, who we've had a lot of great success with. Really fantastic action movie with Ryan Gosling. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. How is this price increase being received currently? But I think you've also talked a little bit about, at least in the past, perhaps not seeing the incremental profit potential as well in terms of the lower price, ad-supported tier. Has that view changed? In a period of slower sub-growth, are you more likely to pull back to manage costs or to lean in to further differentiate the offering? Has anything changed, in your view, just from a cultural perspective around either content acquisition or in some of the more operational functions? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment was 100% negative. About prices, the sentiment was 75% negative. About costs, the sentiment was 100% negative. About growth, the sentiment was 55% negative.
A short look at how algorithms on Mark's Sign Algo simulate investing in. Netflix identifies algorithm by Sign 002 as the best algorithm for buy and hold, with a 63.33% return over the last 5 years while being 69% of the time in cash.
I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.